Let's bring in Jason Trennert, chairman of Strategas, a Baird company, and Mike Santoli is our senior markets commentator. Jason, welcome. Let me begin with you. Do you see it as simply as this, that if Mr. Trump wins, it's better for stocks, and if Ms. Harris wins, it's a little harsher for risk assets?
Tyler, I very much do see it that way, and I think it's only because we've had Donald Trump as president before. It's more of a much known, better entity, but better known quantity than Kamala Harris. And I think some of Vice President Harris's, some of her proposals seem to be, at least in extremis, very much anti-risk, particularly anti-stock. So, we'll find out. Of course, a lot of this depends on what Congress looks like. A lot of it depends on events as well. But I very much ascribe to that view that a Trump victory would be very good for stocks, and I think a Harris victory would not be particularly good for risk assets.
One of the things you see, Jason, is the biggest theme, no matter who wins, biggest themes in the market is deglobalization. I guess that means the returning to the United States of major manufacturing processes that could help defense, gold, and among other things, I guess artificial intelligence.
Yeah, listen, I think there's very few things that Republicans and Democrats can agree on, Tyler, these days. But one of the things they can agree on is that China is seen at best as an unreliable trading partner and at worst an enemy. And therefore, there's a very strong tendency to want to do more manufacturing closer to where goods are being produced. So these very elaborate supply chains, in my opinion, are going to be shortened quite a bit, which means higher costs. But I also think that the consensus largely has moved much more towards really President Trump's view in 2015 and 2016 on this point. And so downside of that is could be a bit more, could cost us a bit more. The good news, of course, is that you have more secure supply chains for things that we desperately need and could be national security issues.
And Mike, if we just zoom out for a minute, obviously the easiest trade of the past 10 years, no matter who the administration has been, to own big tech.
Sure.
To own the big, now they're called hyperscalers. Is there a risk of focusing too much on whether you buy the industrials or don't under this president or that president versus saying, is it still just a sure thing to stick with those kind of secular growth stories?
I would say that those are the stocks that are probably most immune to any real policy swing, as much as it might be a little bit of trying to, nip their ambitions in terms of regulation. I think really, though, if you ask me, give me what are the top three things you want to know in terms of how the stock market's going to do from here on out, I don't know if the election result, it makes the top three.
Wow.
Right? Just because the underlying trend is what it is. You mentioned the ISM services number today. I've been focusing on it. That's when bond yields really started to kick higher. When we got that number, it's the largest segment of the U.S. economy, and it seems to be humming. And so, yes, there is a little bit of a buy bonds if Harris wins, because it's going to be a gridlock scenario and it's not going to be kind of a higher metabolism economy. I think that the tough part here is to figure out whether the present conditions are close enough or too different from, let's say, 2016 to when that sort of deregulatory lower tax medicine that came with the first Trump administration was the absolute welcome thing. We were dealing with undershooting inflation, subpar growth.
Yes.
We had this very, very sluggish economy, and that was the fix. Right now, we've been trying to restrain nominal GDP growth. And so it's a little bit of a different. By the way,
and 2020. He's not talking about corporate tax. I mean, that was the point I guess I was making last hour.
Right.
What's in the agenda that would actually deliver a real big short-term boost to stocks or the economy?
Yeah, and it doesn't seem like it. Yeah, who knows? It's vibes. It's getting it out of the way. I mean, I think the market's acting today as if it realizes we're going to have some kind of result at some point not too far away.
Really?
And there's well, I don't mean necessarily tonight. But I think the market's acting as if we have the potential to re-risk because we spent a month churning around. The average stock has corrected quite a bit, even though the indexes have hung in there. And everybody believes November, December is a buy for stocks. Whether it's true or not, people believe it. So I think that's what's going on. Also, we traded at like a 1 month low in the S&P at the close yesterday. Wow. So we're just bouncing to kind of get back toward a neutral spot.